Hello, students. Today we're going to talk about investment philosophy. I am Yusuf Bonaparte, professor in finance, and I am the director for externals, CU Denver Business School. And I also do consulting to institutional investment companies in global companies, actually. When you say investment philosophy and you go to YouTube and this, you will find videos, which is a wrong philosophy to give you, which is they tell you how much to invest in stock, how much in bond, and trying to show you that investing in stock, it's a good idea, better than investing in bond, and you have to put like 70-30 or 65-35 or 75-25. And they think the allocation between bond and stock, it's a big deal. This is the story. No, this is not investment philosophy. This is part of it, so I call it narrow philosophy, but the right philosophy is what stocks to invest and what ETF. ETF like indexes, like the S&P index, the Dow, the NASDAQ. So you cannot buy the index, but you can buy an ETF that reflects the index. A company can create the index and sell it to you, but you cannot buy physically the S&P, but you can buy the spider, which is a company can sell you the spider. So what is that investment philosophy and why we need investment philosophy? Investment philosophy is similar to the US Constitution, which is formulate the political system in America and the rights and no rights and things like that. The same with the investment philosophy. You give you a guidance, principle, belief, and values to shape your portfolio. It's a framework, make an investment decision. Now, there is a question that matters, that appeals to both of those. Why we need a constitution? Why not just to have a set of laws, for example? Not every country, by the way, has a constitution. And why you need investment philosophy? Just invest. Well, the reason you need that is the following. You need the stock market, especially, it's up and down, up and down. And when the market is in the bull market, when going up, you think you're genius, you start making things, thinking that you're genius. When the market going down, you start thinking that you're a fraud. And it hurts you emotionally when you lose money and things like that. So investment philosophy protect you from all of this daily things, silly things going on in the stock market. Like, for example, the debt ceiling. So what if we didn't have a deal? No big deal, like a day or two, eventually they're going to get the deal. So people did a lot of mistakes. Basically, that's their pain. It's my gain in this case. But if you have a well-defined investment philosophy, you wouldn't care about the debt ceiling, no debt ceiling. You have a long-term path for investment. So another reason you need an investment philosophy, the stock market has at least 5,000 stocks. And you have about a couple hundred ETFs, which is indexes, reflect the indexes. Again, the S&P is an index, you cannot buy it. But there's a company that mimic the index and sell you the spider, which is exactly what the S&P does. So we call those ETF. I buy a lot of ETF, by the way. And if you want to analyze 5,000 stocks and a couple hundred ETFs, it's going to take you a couple of years. By the time you're done, the first analysis doesn't make sense because it's old and it's not going to help you. You need to update your research. So you go back and forth, you never make a decision. So we need to downsize this 5,000, a couple hundred, to something like 40 to 50 stocks, an ETF that you want to invest. And then you analyze each company and build a portfolio. So here is the cycle, how to build a portfolio based in what I am doing. Investment philosophy is a true cycle. First, you create a goals and objective for your investment. For example, for me, the goals and objectives are, I'm saving for my daughter. She's 6 years old. She will be 22, 23 when she finishes college. I need to help her with the college tuition. And then if she want to be an entrepreneur, she want to invest in projects that she likes or businesses. So she has some cash. And if she want to travel, have some cash. So my time horizon from this objective, my time horizon is about 15 to 20 years for my daughter. So I can put money, but I don't need it eventually, immediately. And then you go to risk tolerance. Well, because my time horizon is long, my risk tolerance is high. Like I can tolerate a lot of risk. Why? Because the market going up and down, but in the 20 years, it's going to go somehow up. Market belief. So once you get your objective, time horizon and risk tolerance, market belief is critical for you. Because then you need to know that if you think the market is going to crash in the next few years, then you should not invest. So to enter the execute your philosophy, and we're going to talk about this later, first you have to know that the economy is good, investment environment is good, so you need to do market belief, portfolio construction. Then if you have a good belief, then you build a portfolio, and I'll explain to you how to build it. And then you do research and due diligence. This is a separate video. I will show how to do research and due diligence. We're going to analyze a company like Apple and teach you how to do that. Portfolio execution. So after you finish this, you have to execute. You should have discipline, and you use the dollar cost average. Like every month or two, you put 20 to 30% of your money cash in the stock market with a long-term focus, and that will give you satisfied portfolio performance. So you have more information about all of those are here. I'm going to talk about, so here's some definition that you need, like long-term focus. What does that mean? Research, due diligence. So I explain that here. So I'm going to talk about my investment philosophy, and then also Warren Buffett. So you'll have a better idea, two people investment philosophy, so you can compare. My portfolio is 85% is equity stock, like individual stocks, and about 15% ETF, and 3% crypto and blockchain, which is I buy a crypto that their blockchain, you can build a token on it, which is Ethereum. Bitcoin cannot build a token on it. So I like Ethereum, and I'm going to stick with Ethereum for a long time. So my equity, my investment philosophy, it's equity, growth of stocks, 50%, tech stock, 35%. Sometimes can be both growth and tech. And others like value and momentum. So I'm growth, but if there's a company, the price of the company went 60% down, I'll buy it because I know it's underpriced and it's time oversold. So it's time to buy it. ETF, I buy the TQQQ leverage, which is 3 times the Nasdaq. Now here's the story. If you think the Nasdaq is going to give you 10 to 12% on average a year, and you want to buy it, well, if you think 10 to 12%, why not to buy 3 times the Nasdaq? Then you will have 30 to 36%. I'm surprised why people don't do that. Or SOXL will say, well, but also when the Nasdaq going 10%, you're going to go 30% down. So it's risky. But if your time horizon is 30 years or 20 years or 15, so yeah, it's going to go sometimes down, sometimes up, but on average, you're going to have 10 to 12. SOXL, it's a semiconductor. I believe in the semiconductor and chips. It's very heavily in the AI business. I think the future is there. So again, leverage 3 times. The stocks in my portfolio, NVIDIA, 9%. It's a home run stock. In every portfolio, there's a stock that has the biggest investment. We call it home run. It's NVIDIA for me. And then tech and large cap. When we say large cap, we mean 150 billion market cap or more. There is a giga cap, which is above 150 billion, and large cap is above 15 million. Sorry. Large cap is above 15 billion, and giga cap above 150 billion. So I have both large cap and giga cap. So I buy tech like AMD, Tesla, Apple, financial, Falco, this. Other sectors, I buy Costco, Lululemon, Starbucks, and Fizzler. Fizzler is an ETF for like other than financial and tech, I buy other sectors like those. Fizzler is like a renewable ETF. I also buy international Musky, just a little bit. So so we're done with the investment philosophy a little bit. So what next is the next hour, you need to watch a video about Warren Buffett investment philosophy. So you click on that, and there is a homework. Let's click on that first. So this is a video you watch. And then there is a homework. List the Warren Buffett 8 principles after you watch our video. Which one you most agree and which one you least agree. And list for parts, which is my investment philosophy. My investment philosophy is this 1, 2, and 3 slides. These slides, summarize them. So make sure that you watch the video. Thank you so much. And I hope that you enjoy this presentation about investment philosophy. And one more thing is your investment philosophy will be evolved. It took me 4 years, so it also will take you 4 to 5 years. Actually, it took me 6 years to settle in my investment philosophy. Thank you and have a great day.